Financial Fashion Network is a platform we have created to host events and build community by creating content that promote personal development, financial awareness, and mental health. And it's our main goal to be a motivating force to everyone in the world. Now, if you want to support our brand, you can go to www.fnfstore.com and you can find our apparel and you can, support the brand. Take a look at our hoodies, take a look at our joggers. It's getting ready to get cold. So if you see something you like, you can actually get 10% off your first order by using discount code FNF10. Thank you. You are now tuned in to We Invest Different Podcast, where we have high-level conversations. I'm Mr. John Michael Best.
And I'm Victor Thomas II.
Let's tap in. On conversation number 44, we dive into the importance of life insurance, and we had the pleasure of having the educator and the insurance broker, Jasemin Crainey, the owner and founder of J&KC Life Insurance Agency, to talk to us and educate us on life insurance policies. Tap in. Welcome to Facebook Live conversation number 44 of We Invest Different Podcast. I'm co-host, of course, Mr. John Michael Best, and we are here today to start the conversation off about the importance of life insurance, and we will be featuring J&KC Life Insurance Policy. The CEO of that company will be informing us about the different ways we can use life insurance, why we all should have life insurance, etc. So we're going to give the people some time to come on in, and we're going to also get the queen on as well. You guys from my personal page, go on over to We Invest Different Podcast right here. Yeah, right here. So we can get this thing started. We need definitely everybody to join the live over at We Invest Different Podcast right now. No, we're not going live here. We're going live from We Invest Different Podcast page. So you should go join my live on the other page. Yes. This is our first edition of a Facebook Live conversation on the We Invest Different Podcast. So this is such an honor, and I'm glad to have this conversation about such an important topic. And we will get into the reason why we're having this conversation, because us being as young as we are, as I am, we don't really see life insurance as important. And a lot of times we overlook it because we think about dying. A lot of us don't want to think about dying. A lot of us only want to think about living life and turning up. But the thing is, death is inevitable. But we also want to pay attention to the other things that we should know about life insurance as well. Dying isn't the only way you can take advantage of your life insurance policy. So before we get deep into detail, we're going to go ahead and bring the CEO and founder of J&KC Life Insurance Agency on so we can get this conversation started. Here we go. Make sure I got my notes. Make sure everybody got your notepads because you will need it. Hey there she go. How you doing today?
Hi. Can you hear me?
Yeah, I can hear you. It's kind of low, but I can hear you.
Yeah, it's low on my end as well. Just trying to try what I do.
Yeah, it's really low.
You think it's because I'm far? I mean, I'm not far away. I don't know why it's low.
Yeah.
Is it something on my end I need to do?
Is it something in front of the speaker? You ain't got headphones on or nothing, do you?
No.
Wow. Okay.
Do I need to?
Well, I can hear you. I believe I can hear you good enough. I can hear you good enough. It's just not the loudest. But nevertheless, I'm still glad to have you on, though, so we can get this conversation started.
Okay.
Now, first of all, I do want to do an introduction. I really want you to give your name, you know, where you from, and I also want you to talk about the reason why you got into life insurance.
Okay. Well, I am Jasemin Crainey. I started the life insurance business about 3 years ago. Really and honestly, it was kind of I was one of those people that I didn't want to own a business in no way, form, or fashion. It was not a dream of mine. But after working with the state for over 14 years, once the pandemic hit, there were some things that, pretty much made me have to switch jobs and dealing with my children. The schedules had changed. And so I was like, you know what? I need to make a change in job profession so I can be sure that I can accommodate my kids' schedule with their schooling, being that everything had changed during the pandemic. And going in business for myself just made sense. So here I am. I am glad that I did so. Of course, that's a scary thing. You have to jump out by faith after being with a job for over 14 years, especially doing it during a pandemic when businesses are shutting down, things are not going well. So I thank God that he gave me the mind to do so. And it was the best move because, doubled my income. I get to work when I want to, so I am so grateful. I know it was nobody but the Lord that gave me that chance to do so.
And that's good. That's good. That's good. Now, I do want to mention that life insurance isn't something, we mentioned this before the call. Life insurance isn't a conversation that young people have. And that's one of the main reasons I wanted to bring you on the platform outside of promoting, your life insurance business. I want to stress how important it is for us to get into life insurance at a younger age. So I do want to start there. Isn't it better to get in at a young age? I want you to explain why is it important for us to start young, because it's important.
It's definitely important to start young. Dealing with premiums, for one, that's the biggest thing. A lot of times people are like, well, they don't want to pay certain premiums, or, they may feel like maybe it's too high. But, there's people that are paying, $10, $19, a month just to insure, their life. And all that is because they started out young. You have to, the younger you are, the lower your premium will be.
Right.
The other thing is you're running a risk. The older we get, the more we're on this earth, the more we're running a risk of getting sick, having any kind of medical issues. So once things like that start, well, that ups your premiums as well. So you want to do what you can to get the best premium possible so it doesn't become a strain on your budget. You don't want to get to a point where you have to decide, okay, do I, feed my child, or do I pay, life insurance to make sure that I'm okay? You don't want to get to that point. You want to get your premiums where it's comfortable, because at the end of the day, it's an investment. It's an investment to make sure that whoever you're leaving behind, that they are taken care of.
Okay. Now, thank you for that, because that's a very important point. Now, leading on to the next question, I know that majority of the time when I was taught about life insurance, I noticed that we more so spoke about, dying more so than being able to take advantage of life insurance policy while we're alive. Because I didn't really know about the term life insurance policies. I was more so marketed on, whole life. So I think that a lot of people in our community, in the melanated communities, we more so think about it in terms of whole life. So could you break down the difference between short term, what term life and whole life, and talk about the differences of why we should choose each?
So, I always hear that, okay, what's better, or oh, term life is not any good because it terminates after a certain period of time. And it does terminate after a certain period of time. But the way you look at things is you look at what type of assets you have. And take me for an example. I'm buying a home. So normally buying a home, you're going to 9 times out of 10 have a 30-year mortgage. So if I pass away today, you know what I'm saying, I want to be sure that, you know, my husband can pay off the home if this should he choose. You know, I want to be sure that you know, if we have cars, you know, with payments or whatever, you know, if that needs to be taken care of. Those term policies, normally they're your lower premium policies, but yet they pay bigger amounts. So that's when you hear about your 100,000, 200, 300,000, you know, things like that. You're paying, those are normally your terms. Now, can you get a whole life in 100, 200, 300? Of course. But you're going to be paying some nice bit of money, you know, on a monthly basis. You can hear of a $200,000, $300,000 policy and they're paying, you know, 20 something dollars a month. You know, but if that's only in term basis, you know, because it will terminate after a certain period of time. And so for me, you know, having that term policy is good for me because I'm only going to need to make sure we pay off a home, you know, for 30 years. You know what I mean? So having a 30-year term policy, that seems like right. I need that. But once the 30-year policy goes away, you know what I mean, then I no longer may need that for that reason. Now, if I want it for another reason, then sure. But normally, once people are in their, you know, 70s and things of that nature, they're not thinking about investing more in bigger assets. They're thinking more of, okay, I'm going into retirement status, so I don't need to buy a whole nother home. I don't need to, you know, if anything, they're going to have something small. If they need to buy a car or something like that, those are small assets. So usually a whole life policy could cover something like that. So I always recommend to have both. You know, you want to make sure you have a whole life policy for the fact of it does just what it says. It lasts for its whole life. Now, normally, like when you get a whole life policy, yes, it accumulates cash value. And that's usually the perk for everybody, is that it accumulates cash value. However, it's going to cost you more in premiums on a monthly basis. And it's going to be a small amount. So for instance, you know, I just had someone ask me about a quote because she has a $200 some policy, term policy, where she pays, I think, $32 for or something like that. And she was like, how can I get a whole life policy? I said, well, keep in mind that you may need to shrink your amount for your whole life policy. I ran her for a quote for $50,000 and it was $47 and, you know, $47 and some change on a monthly basis. And so she was just like, wait, what? And I said, because it's lasting for your whole life. It accumulates cash value. So normally when people get a whole life policy, they're only getting it to make sure that they're covering their final expenses. And usually when people are expecting to die, you know, they're in their later ages. All they need to make sure is, you know, that the burial or the funeral is covered, you know, maybe to pay off a few little bills that was left over, like maybe if there was a car, you know, and you're passing it over to, you know, your son or someone, a grandson, you know, you want to make sure that that payment is paid or the car is paid off. Though the whole life policy can cover things like that. But you want to always, like I said, if I talk to a client, you know, if I know that having both policies is in their budget, I definitely push it, because you want to make sure that those assets are being taken care of, and those assets, they can get covered in those term policies. And you want to make sure your burial expenses is taken care of. So once those term policies go away, you still have that whole life policy sitting there. You see what I'm saying?
So, a whole life is usually like a backing.
Basically, basically, yes, because it's going to make sure that you have everything covered. Now, I know sometimes people like, okay, well, what is this thing about, you know, borrowing from a whole life policy? I always say, you know, when they talk about whole life, they can borrow from because it accumulates the cash, and you can. That was one of the ways that I helped start my business. I actually had a whole life policy. I did borrow from it. But people have to also keep in mind that when you borrow from it, okay, the plus, let me just say this, the plus is a borrow from a whole life policy. You don't have to worry about a credit check. You don't have to worry about, okay, what if they want to run my credit, or what if they want to, like there's a certain interest rate, you don't have to worry about those things. However, just like anything else, they always are going to want a fee. So let's just say you don't pay that money back within the year of borrowing from that. Normally, your insurance company will charge you a fee. It may not be as big as some of the interest rates out there, but there is a fee. Now, what I did, because I had so many other policies out there, I went ahead and canceled mine out and just cashed it out altogether. You know what I mean? So that way I didn't have to worry about paying anything back. It was my money.
How long did you build it? How long did you build that particular insurance policy before you borrowed against it?
So I got that whole life policy when I say in my lower 20s. I'm in the 40 range now. So it had a nice little bit of accumulated cash there. But let me just say this, now when you're talking about premiums for a whole life policy, there are people that are paying 100 and something or 200 and something a month. And there are people that are paying $25 a month. It just, again, it depends on the age. However, when you see those ones that are paying that 200 or they're 100, it's going to accumulate a lot faster.
Right.
So it just depends on what age did you get the whole life policy, and they even have it where you can pay off. Like I have plans where you could pay off a whole life policy. It could take you 10 years, it could take you 20 years, and you have that amount. Let's just say you want to do $50,000 and you want to do a 20-year plan. Well, in 20 years, you don't have to worry about another premium. You got $50,000 just sitting there.
Wow.
Mm-hmm.
Now that's a gem. Now that's one of the main reasons that's one of the points I wanted to make clear, because we need to look at life insurance as an investment. Like, yes. As an investment, it's not just about dying. Like, no. when you're paying that premium, it's actually going someplace. Now, I want to talk about what the insurance companies are doing with the money that you're giving them. Is that something that we need to look into? Is that important? Do we need to do research on the insurance companies?
Well, it's definitely important that you make sure you get with a company that is A+. They have an A+ rating, because all of them don't. Sometimes you hear people, especially long time ago, when the insurance guy would come around, and collect the money from my grandma. There were a lot of times people were scamming. They were keeping the money for themselves, and they wasn't giving it to the company. Right. So there's a lot of scams out there. Of course, they're a lot. They're a little bit more stricter now when it comes to our license, and when it comes to money laundering and things of that nature. So they're a little bit more strict on our license now. So a lot of that has calmed down. But what I like to do, I pride myself as a broker, is I watch companies. I only represent companies that are A+. So 9 times out of 10, they may be a little bit more expensive than the one around the corner that's not A+. But I'd rather pay a few dollars more to make sure that when I pass away, my family's going to see that money. You know what I'm saying? Versus, that insurance company giving them hell and not giving them no money at all.
Right.
So it's very important as a broker that, you're watching these companies. As soon as I see that, that there's, that's not a company that's reputable, I'm not going to put them on I'm not going to be contracted with them. I'm not going to try and, sell my client on that, because I want to be treated just like I want to treat my client just like I want to be treated. So I wouldn't want to do that. So it's very important as a broker that you watch the different carriers that, see what they're doing with the money. Are they actually making sure that they show up for that client? So that's the good thing about being in a financial company, a strong financial company like I'm in, because that's where I get my contracts from. And we, as agents, we watch these things. But that the other good thing about that is that I don't, represent one company. I have 20 plus different insurance carriers that I deal with. So that is the good thing. I'm not just for that one I'm not going to just sell for that one company, because here's the thing, you got different individuals that have different things going on. So like, for instance, let's just say, for example, with you, if you had diabetes, if you had high blood pressure, and maybe you had cancer about 20 years ago, well, Mutual of Omaha may not be a good candidate for you. And I don't want to waste your time. I'm not going to sign you up with that company knowing that they're going to decline you. Because the other thing that people don't know is every time you get declined, that is like a mark against your life insurance record.
Wow.
Yeah, that's actually a question on the application. Have you ever been denied or been declined life insurance? And you have some companies, you have some companies that they look at your record tooth and nail. They want to know everything. They're very picky. And if they see that, that's a mark against you.
No.
So I'm not gonna waste your time and my time and try and sign you up with a company I know that's not gonna approve you. I'm gonna get you with a company that I'm almost 99% sure you're gonna get an approval.
Okay, good. That was a lot of good information. I knew nothing about those things you said. So definitely informative.
CEO here, tapping in. I just wanted to remind all of our supporters and all of our listeners to share our podcast and encourage everybody to subscribe and get these great conversations. Back to the show.
A lot of good information. I knew nothing about those things you said. So definitely informative. Now, next question. When it comes to not being able to get a policy because of your health, now, in the mental health community, is that also a factor when it comes to life insurance? Like, okay, so let's talk about that. How important is it? Okay, let's say if I'm young, let's say my age, like he was saying, I can have a condition at my young age. What would be some options that I have if I have a sickness that I can do nothing about?
So it just depends. Like, we have some companies that they're all for trying to do whatever they can to cover you. Just keep in mind, the more of a risk you are, the more expensive your premiums are going to be. I have a company that if they seek depression on your record, if you're taking any kind of depression medicines, it's an automatic decline. They don't even want to see you.
What?
Mm-hmm. That's why it's so important that you learn the different companies that you deal with, because you don't want to sign people up with just any old Joe. You want to know what company you're dealing with. You want to know. So even when it comes to particular medications, and maybe certain medications you on, they don't want you, because in their minds, the medication can do XYZ, that in return makes you a risk. And if they can help not paying you, you have to keep in mind, when you're paying $19, for 30 years or $20 for 30 years, it does not add up to $200,000. You know what I mean?
Right.
So
Right.
it has to be somewhere. Companies have to have some type of strict, guideline, you know what I'm saying, when they take you on, so it makes sense. I mean, you would, if all I'm paying you is $19, and let's just say I die in 2 months and you got to give me $150,000, you're going to be like, what in the world? I ain't getting that's not a fair trade, so companies, I understand the reason why they're strict like they are, you know what I mean? Because it's not a fair trade. Now, there are sometimes where you're paying a whole heck of a lot a month and you only getting back a little bit, and that's when you start getting into that older, because like there are ones that only have $10,000 of life insurance and they're paying $100 and some a month. But it's because of their age. Yes, it's because of their age. They're a big risk, and of course by that time they're in that that 70, that 70 plus, and then it depends on what kind of issues they got going on. if they got medical issues, then yeah. So the way it works, the more of the risk, the higher the premium. So yeah, but if you have that mental, now usually if people just say, well, I have anxiety, and I would ask them, when was the last time you were prescribed any medications?
Okay.
And if they tell me, well, I haven't been prescribed anything, I'm like, okay, cool. I'm
Cool.
going to say no. I'm going to say
Okay,
no,
cool.
because there's no reason to. And now if there's something that you're not telling me and the insurance company figure it out, they go and look at your record and say, well, she's taking X, Y, Z. So what's going on with that? Then you got to tell me, because there are some that, they don't want to go into some things. And I let them know, of course, when we talk, this is confidential. It's just like going to the doctor. You know what I mean? We have to be real with one another, because if I'm going to represent you with this company, I got to know what I'm getting into. Let me know, because then I may not even sign you up with this particular company if I know particular things. You know what I mean? I might just go with another company if I know that's on your record. You know what I mean?
Right.
So it's very important that you're real with your, with your agent, to make sure they can fight for you, just like a lawyer. If you go to court,
That's what it sounds like.
It is exactly like that.
And I asked that question because, I'm a mental health advocate,
Mm-hmm.
but it's so many in the mental health community that aren't diagnosed.
Mm-hmm.
Like, we deal with issues every day and don't never get a chance to go to the doctor, don't never get a chance to go to therapy. So it's like a blur. We don't know what's wrong with us. So it's like when we do get asked what's our medical condition, we say, we really don't know when it comes to mental health. So I just wanted to clear the air on that aspect, because if you're not diagnosed, it's not on your record.
Yeah, it's not on your record, so don't worry about it. And the other thing too, I just want to put out there, you don't want to volunteer yourself for different medications. Let's just say, I don't know, if you have a friend that does not have a doctor, but yet you do, and you decide to tell your doctor, hey, can you prescribe me XYZ? I only, I have this and I know this will take care of it. There are some doctors that will say, okay, because you are a client that comes and goes all the time. They're familiar with you. So just keep in mind that when you're doing that, and let's just say now you want some insurance, and if it's, I don't know, I'm just giving an example, but if it's for high blood pressure and you tell me that you don't have high blood pressure, most insurance companies are going to come back and say, well, hey, they have this particular medicine on their prescription report. What's going on with that? So you have to be careful, you know what I'm saying, putting different medications that don't belong on your record, because again, they do pull that.
So they look at medication like, okay, what if you don't per se have a condition, but you do take medication? So that
then why are you taking medication if you don't have a condition?
I don't know. Some people do.
Yeah. And I promise I'm not trying to put you on the spot, but I get this all the time. Yeah, I got this, but I don't feel that. They put me on a high blood pressure medicine, but ain't nothing wrong with my blood pressure. Okay.
So, but that's on the record as well.
Yeah, because then that means you went to the doctor and you said something about your blood pressure. So whether it's been regulated for the last 6 months, that don't matter. You said something about the blood pressure. They detected it. So that means in the insurance world, you have high blood pressure.
Wow.
Yeah, because that's what they're going to go by.
That's crazy. So everybody, I just want everybody to know that when it comes to life insurance policy, she's explaining to us that we have to consider all of these factors. We have to consider our health. We have to consider our medication. We have to consider all of those things in our history, because these insurance companies are not going to give away their money for free.
No,
so
exactly.
They got to have some type of data.
And the other thing too, I just want to say, when it comes down to whole life versus term life, I want it to be known that term, even though you're paying a small minimum premium on a monthly basis, when it comes to term life, it is it is harder to qualify for term life insurance than it is whole life. They'll give whole life to you faster than they would do term life, because you know why? They're giving a whole heck of a lot more. It's in that 100, 200, 300, $1,000 area. You're paying less and you're getting more, versus with whole life, you're paying more and getting less. So
Wow.
they make it easy for you to qualify for whole life. Term life. Now, the other good thing about having insurance too, and you talk about, being able to benefit from having your life insurance without actually dying. There is a thing called living benefits, and I have that as well. So what that's basically saying, if you go to the hospital due to a heart attack, a stroke, or if you end up with cancer, you know what they'll do? You don't have to be dying, but they'll send you out a check. You know why? Because you can't return back to work for a little while.
How do you get that?
So that's that. If that's something that you would like, I do offer that as well. It's in the insurance packet.
Wow.
We have, they call that life insurance with living benefits.
Insurance with living benefits. I'm taking a note. That's why I'm writing this down.
Mm-hmm. Yeah. So I made sure, like, for instance, my husband right now, what I'm saying, he has high blood pressure. And those, if his high blood pressure gets too bad off, he could go into stroke level, and he was almost there. So thankfully, what I'm saying, when we had to rush him to the hospital and he was just about at stroke level, had they coded him as having a stroke, all I need to do is make a phone call to Transamerica. Hey, he had this, that, and the other. Submit my paperwork, and we got a check.
Wow, that's very beneficial, and I think that'll be helpful for a lot of people.
So really and honestly, when it comes to insurance like this, you're basically, like you said, you are investing in your life. You want to invest in keeping your life comfortable, and unfortunately, this is not what we are taught in the minority community, because what we want to do is whatever it takes to get lashes done, whatever it takes to get hair done, whatever it takes to get, to have the nicest car, to have the rims on the car. That's where we invest at. But when, if you can invest a little bit of that money that you waste on a monthly basis anyway, invest that back into your life and make sure that when things happen to you, you're comfortable. Because guess what? If you were to have a heart attack right now, you know what I mean? And you are in that hospital, you got bills coming at you like no tomorrow. What you gonna do? You're already feeling bad in the hospital, can't do nothing. At least you got something coming in because you decided to make an investment on your life and to make sure that at least your family is taken care of.
Right.
You know what I mean?
Yes, I do want to thank you for coming on. I'm not sure how long we've been on, but I'm going to check the time. We just hit close to 31 minutes.
Okay.
We have went over a lot. And one thing that I do want to stress that I learned mainly, one of the main things I learned is how important an insurance broker is. Because all of the stuff that you're talking about, you're an insurance broker. So, like, if you don't go to a good insurance broker, they will probably send your application to different companies. And like you said, people can see, like the insurance companies can see how many times you were denied. So it's important that you go to a good insurance broker that's going to give you the best chance at getting the best insurance company the first or second time. Because you don't want...
And educate you on what you have.
Right. That too. That part right there. Because if you don't really know what's going on, then how can you going to be able to benefit from it?
Mm-hmm.
So I do want to thank you for coming on. And do you want to tell the people where they can find you? Give all of your information out. So when they want to come, sign up for some life insurance, and they want to be educated on what's best for them, they can come directly to you.
I want to say this before we get into that. One other thing I want to make sure that we hit on is when it comes to group insurance versus private insurance, and I do sell both. But just so we have I want people to understand, because this is another thing that people kind of get mixed up with. A lot of times people have group insurance with their job, and that is great. If you can get it. The more insurance you have, the better. Because sometimes people get confused on, can I have more than one insurance? Yes, you can have as many policies as you want. the thing is, just know if you have insurance, group insurance, and you leave that job, you're leaving that insurance with that job. 9 times out of 10, you cannot take that group insurance with you. Now, a lot of times, if you can, what they'll do is they will hike up the price just so you can say, oh no, I don't want that. Because again, they want you out the group. Once you leave the job, they really want you out the group. They really don't want to insure you, unfortunately. But that's just something to keep in mind. And the reason why I'm saying that is because a lot of times people get caught up in, well, I don't plan on leaving the job. You know, I'll be here for a while. I've been here over 10 years. I'm not going anywhere. Lesson learned from me. Oh, been with the state over 14 years. I had to go out and get another policy. Had I got that other policy, you know, making sure I had that when I was younger versus now, of course my premiums are higher now.
Right.
You know what I mean? So if it's nothing but getting something, you know, small, if you got, you know, like a term policy out there for 30 years, you know, get something so that way if you leave that job, you're always insured no matter what. And you don't have to go back out there and try and get another policy at the age that you are by leaving that job. Your prices are already set in, or your amount is already locked in, you know, for the amount for the age you were when you first got the policy.
Right.
So that's just something I like to keep in mind, because a lot of times people say, well, I have insurance with the job, and they don't think about if they leave the job, they feel like they could take their insurance with them. 9 times out of 10, you cannot. But
what about the bank?
Hmm?
What about the insurance that the bank try to give you?
Now, whatever their policy is, normally when it comes to having group insurance with different companies like the banks and it's still called group insurance. A lot of times they want you to continue to be a member with them in order to keep that insurance. That's a perk in being a member with that bank.
Right.
Like it's a perk in being a worker or an employee for that company.
Right.
Is them to offer you that insurance.
Understood.
Yeah. But again, you know, you can definitely catch me. I do serve all states in Georgia, Pennsylvania, and in Florida. And depending on, you know, how many we got and anybody else that come to me, it's nothing for me to get licensed just like that. It's just a matter of paying a non-resident license, and I can catch that too. So it doesn't mean that I can't help you if you're not in those states. But you can definitely message me on Facebook. My phone number is there. You're able to get quotes on the website. I do like to say, keep in mind, if you do get the quote on the website, that is not a definite price. That's just an estimate, because quotes are really more, an actual price is really depending on your qualifications. You know what I mean? You may get something cheaper and you may get something more expensive. But you will never know until we actually sit down and talk and you tell me your qualifications. That's one of the reasons why I ask your qualifications in the beginning versus trying to find out as we're filling out an application, because I don't want to fill out not one application if I know you're not going to qualify.
Right. That's true. I had one more question. I think it tried to run away from me. But it is what it is. I thank you for tapping in. I really do. I appreciate you for taking the time out to talk about this important topic, because it's extinct. It's definitely extinct.
Yeah.
It's rare. So I thank you for hopping into the business. I thank you for staying in the business, because we need it in our communities.
Yeah.
I thank you for joining. You know, We Invest Different Podcast for conversation number 44. And everybody follow her. Everybody follow her now. Not just because she can sign you up, but also use her wealth of knowledge, use her wisdom, ask questions. So yeah, that's what I wanted to ask you. Do you do free consultations or do you charge for them? Because I know that takes time.
No, I pretty much consultate with any and everybody that asks me questions. Okay. I get pulled at, you know, at church. I get pulled, you know, I'll ask anybody, because to me, I am doing a great service if I can answer any questions, you know, because again, we do not inquire about these things. We just don't.
Right.
And I don't care if you buy it from me or not. I've had someone bring me their policy paperwork that they've had with somebody totally different. And they're like, can you tell me what I got? Because I don't know. And come to,
Wow.
and even in that, I thank God that I took my time to do it. Because guess what? She was being charged double for a policy that I could give her for half, for one. And for two, her policy was not immediate, so meaning that it was graded. So if she was to die, let's just say she died that day, whoever her beneficiary was, they wouldn't have got paid only but what she paid into it.
Whoa.
But I was able to find her something immediate, so meaning that she gets the full payment. So you know what I'm saying? People just don't know. Sometimes you got agents out there, they're just doing it for a sale. They just want the quick money. You know what I mean? But I'm not there for that. Like I said, I want to make sure someone is doing me just like I want to be treated.
Right. That's respect. That's respect, you guys. Everybody go and check her out. Everybody come to her as well for your life insurance policy needs. And again, I thank you for coming on the show.
Thank you.
And I also, no problem. I definitely see something in the future that we can work with as well, because I think we could possibly do a workshop or have a training, a brief training. That'd be so awesome. So definitely in the near future, we will tap back into this topic of life insurance. So again, to the audience, I thank you guys for tuning in to conversation number 44 of We Invest Different podcast. I'm co-host Mr. John Michael Best, and I thank the Queen. What's your name again?
Jasemin Crainey.
And let's go ahead and get out of here. Thank you again. See you later.
Thank you. Bye-bye.
Bye-bye. And there we go, you guys. That's conversation number 44. I appreciate everybody for tuning in. And we will be taking this episode off and putting it on our audio platform as well. Thank you guys for tuning in. We out.
Are you stressed, anxious, or depressed? Well, here's some good news for you. We started a mental health movement called MH10, and we encourage people to pay more attention to their mental health. So do this for us. Take at least 10 minutes per day to take a walk in nature, a jog, run, or just meditation to decrease your stress, because stress is one of the leading causes of chronic physical and mental illnesses in the body. So if you want to join the movement, you can also post on social media, post your 10 minutes by using hashtag MH10 or mental health 10 minutes.